Welcome back. Yesterday, the Fed has delivered another 25 basis point rate cut and also announced the end of quantitative tightening. Both of the signs or both of the actions are clearly dovish and are there to support financial conditions in the United States. Powell's message during the press conference or the speech that he delivered made these two actions contradicting, and I explain why. So when we look at the interest rate cut and the end of quantitative tightening, which are the two policy actions which was announced yesterday, clearly pointing towards an easing stance or the rising risk to employment. So with these policies and these actions, the Fed is trying to support financial stability in the United States. But Powell's speech didn't match that tone at all. He refused to commit to more rate cuts, and also he stressed data dependence and even warned that inflation remains somewhat elevated. Now this attitude or these tones clearly undermined the policy actions. So the actions were dovish, but Powell's rhetoric was clearly hawkish and leaned toward a more cautious approach, creating a disconnect between policy actions and the communications. And this is why every market, every asset has been sold off, because it created a massive uncertainty and a question mark among traders and investors. Now, professional traders are extremely trained and experienced to pick up all of these nuances when there is a disconnect between the policy move and the actual rhetoric. And when they feel inconsistency, they rather pull out from the actual positions in the market and stay put on the sidelines until they get something to trade on. If you want morning briefings on the high impact days and if you want to understand hard economic data and fundamentals, your place is at the Alpha FX Academy. I deliver morning briefings on high impact days, and also I help traders. I guide them through, navigate them through on the sea of fundamental data. So if you want to become a part of one of the greatest trading communities in the whole world, and if you want to get daily signals and access to my personal trades, link below the video. And now, let's go to the technical analysis. The first thing I always do is look at the signals and the current positions that we opened yesterday or today. So as you can see on the chart, I have two running positions which were opened today. And the first one is running at 440 pips, the other one is 340 pips. Now these positions were opened not long ago. Let me just pull up my Discord. You can see that this was opened around 9 a.m. UK time, 10 o'clock Central European time, and you can calculate your time zone. And it was running at around 300 pips, and it's gone up all the way to 400 and 500 pips. If you would like to get these kind of signals delivered to your Discord with stop loss, TP, take profit, and all the trade details, please go to alphafx.eu. Now the subscription is only £59 per month, which is less than a daily coffee, and you get quality signals and macroeconomic analysis straight from an economist. You can find all the links below the video. But let's go back to the chart. You can see that we are on the 30-minute time frame. And today in the economic calendar, which is very important that you check every single day, because macroeconomics fundamentals are the alpha and omega of trading. Today we are going to have GDP, which will be very important. This is the first revision of third quarter in 2025. And also we have PCE prices, but other than that, we don't have anything in the economic calendar. Now looking at tomorrow. Now tomorrow is more exciting because we have something called the PCE price index. Now the PCE is the Fed's preferred gauge of inflation, not the CPI, not the PPI, it's the PCE price index. The difference between PCE and CPI is that PCE takes into account the effect of substitution. For example, when prices are rising, CPI doesn't take into account whether households shopping down or up. So for example, if a household has $100 budget each month to buy groceries, this is just an example, we can do it $1,000. So if a household has $1,000 budget to buy groceries each month, but because of inflation prices are increasing, so they can't afford to buy the same things, they have to either don't buy something or they have to shop down. For example, they used to buy butter every single month, the expensive one, the Lurpak one. But because the prices have gone up, now they have to buy a cheaper alternative. And this is why PCE is a very elegant way to measure actual inflation and the pressure it puts on disposable income of households. So tomorrow is going to be an exciting day, and I will be live trading it. So if you want to live trade, come to the Alpha FX community. Now currently you can see that previously we had this upward sending channel which looked like a bear flag, and it did sell off at this point, and this is where we had the Powell speech yesterday. And as I mentioned at the beginning of the video, there was a huge discrepancy of the policy action and the actual communication what Powell delivered, and this has caused market to drop. But when we look at the market conditions, I see further bullish signs because nothing has changed since the policy meeting, only the discrepancy between what Powell said and what they did with the Fed. So my view and my bias on gold market continues or remains to be cautiously bullish. And when we look at the market structure, and if you zoom out, you can see that yes, there was a bit of a wobble yesterday, but the general market structure is still bullish. And what happened yesterday is that price came back to the original trend. Now, after this steep rally, of course, every impulse move is followed by a retracement or a correction, and this is what happened in the last 2 weeks. The first part of the drop was caused by the crypto sell-off. Now, it was nothing to do with gold. It was the general consensus that all the markets or all the assets were selling off, and gold was no different. When the shit hits the fan, there is no hiding. So my view or my bias remains continuously bullish. And you can see the price is trading above the daily pivot, and we had a reversal pattern. Now, when you see that price is reversing, one of the tricks or tips I can give you is that look for reversal patterns on a lower time frame. So when the market is going down and you can see that this downward sending market structure is broken on a lower time frame, retested, and then price goes up in higher highs and higher lows, then you know that we have a new market structure and price is reversing. So if I go down to a lower time frame, it's easier to tell you or easier to show you what I'm talking about. Price broke this downward sending trend line. It did retest 2 times. And if you go down, you also can use pattern analysis. This is a nice big bullish M, and you can see that price is since that creating higher highs and higher lows. Almost higher high, but definitely higher low. Definitely higher high. And what followed by a higher high? A higher low. So the next entry, what I'm going to show you, or the next possible entry, could be at 3,980. And after that, it's clear traffic to 4,050. So if you haven't entered into the trade with us, and quickly just let's check the open position, is still running close to 400 pips. That's around 5,000 pounds with 10 minutes of work. So if you haven't entered, or if you ask me whether it would enter to a second position or third position, yes, I would. And what I'm going to do is I first analyze the direction, the fundamentals, and the macroeconomics, and everything is clearly bullish. The second thing I do is I look for entries on the chart. So I use technical analysis to find entries. Now, once again, if you would like to get daily signals, please go to alphafx.eu and select the plan which suits you. Going back to the chart, so using technical analysis to find entries, you can clearly see that we have a strong support level at this 3,980, and if I put the Fibonacci up, I guarantee it's going to give you a very nice 50% and 61.80. So this is the golden zone which I will be looking to buy, and price most likely will come back because every impulse move is followed by a retracement. So if price comes back, I will enter, but I already have 2 reasonably large positions, close to 5,500 pounds. But if I take profit and if I want to make more money, I would look for entries at this price level, exactly like here. And of course, the first take profit level is going to be the previous high at 4,004, so this area right here. And the second one should be at the previous resistance at 4,030. If it goes any higher, it's just a bonus. And don't forget that we have Forex 50% deposit bonus. Now, this is a wonderful way to increase your equity. Now, the equity you cannot withdraw, but you can use it to trade it. And if you make any profits, you can withdraw the profits, but then you're going to lose the equity bonus. So use it wisely. Here's an example. If you deposit $1,000 with Forex, which is one of the best brokers, you get $500. Now, this deposit is added to your trading account as an equity, but not as a balance. So you can use it to trade, but you can't withdraw this extra $500, but you can withdraw the profits. Once again, I'm looking for new entries at 3,980, and if you want daily signals, go to alphafx.eu because limited memberships are not forever. Currently, we have 5 memberships available. If you want to grab one, go to alphafx.eu. Thank you so much. This is the Alpha FX.